Welcome back to the Hanken Cash Club. I hope your day started with presents. A Merry Christmas to all, and as the time of the year has come to drink beer, I figured it'd be a good idea to take a look at Olvi again. And shortly, let's go through this. They got a strong local presence in Finland, Denmark, and the Baltics plus Belarus. A really strong balance sheet, we're going to take a look at that. Then also strong market position, they're really popular in these countries. And they're sustainable. That's very good if you care about that. And they are growing. But their segment performance for the last quarter, it wasn't the best, but that was kind of expected. They did have an uptick in Finland, where the weather was way better in Q3 than in Q2. But overall, the consumers don't really want to spend money, but they are preparing for the turnovers. That's pretty much the case in all consumer brands right now. Anyways, they are diversified across drinks. Beer is, of course, the biggest one, and but they are growing in soft drinks and non-alcoholic drinks the most, and they are actually taking market share. Even though the volumes are pretty stagnant or even declining a little bit, they are taking market share, so that's really nice to see. The stock price chart doesn't show appreciation for the company, and it's about the same level as it was in my last video about this. It's stagnant, it's alright though. There was a dip and actually I managed to buy it quite well, but it's still at a decent price especially if you're from these areas, or if you want to diversify to these areas, then you can be pretty happy with these price levels as well, but we'll get to the valuation last. As said, this company has an amazing balance sheet. It's one of the most impressive ones in the market, in the Finnish market at least. They have 221 million in total liabilities, so that would be the gray area. And then 60 million in cash, that would be this one. And then 270 million in current assets. So that's like this green total area. So they got more current assets than their total liabilities. And this is an insanely good position, and that's what allows them to do acquisitions while not raising debt. They did now in September announce 3 acquisitions. It happened to be this many now. They don't do this many all the time, but they're buying a premium beer brand in Latvia, a very popular water, mineral and vitamin water brand in Estonia. And then there was a really interesting acquisition in Bosnia and Herzegovina. And this would be a completely new market for Olvi, as they are not in the Balkans from before. Now, obviously, this brings risks, as it might be that the company that they bought will not be performing as well, or maybe the integrations will not go as planned. But they said that the business is running very smoothly now, and they mostly plan to find synergies with this one, or I guess growth engines, by bringing the non-alcoholic stuff to the Bosnia and also the neighboring countries, as Banja Luka Pivara apparently only sells beer. So that would be the bonus from that, and I'm quite excited to see how they manage in a new market. The other 2 acquisitions, they said that they can get some pretty good synergies as they have a presence, and I guess those synergies would be coming from logistics mostly. But they are strengthening their position, and as you can see here down in the slide, they are expecting 55 million euros in net sales from these 3 companies, and divide that by their 2024 level net sales of 657 billion. That would give you an inorganic growth rate of 8.4% for 2026 in the top line. These acquisitions are of course subject to regulatory approval and things like that, but shouldn't really be an issue, especially since Olvi isn't such a dominant position, it's not such a critical industries, but they are expected to be closed in the first quarter of 2026, so let's see how that shapes up. Now on to the valuation. So far in 2025, they're on track for about 1% growth. Now, if we count for 2026, the growth rate that they'll only get inorganically, if we want to be pessimistic and assume that the consumers still aren't going to pick up the tab for beer, and maybe if young people aren't drinking as much anymore, then we will assume 0% growth rate other than the inorganic growth from 2026 through 2028. 2029 and 2030, I put a 3% growth rate, which I'm going to be honest, I made up a little bit, but it seems reasonable for them. Now, if they stay at the same operating margin, hopefully that will improve as they have initiatives to help their profitability in Denmark. And of course, through these acquisitions, they want to find synergies. But if they don't, and they get an operating profit of 95, if we apply a trailing 10 times operating profit multiple, it may be lower, but I think 10 is reasonable if they start growing again at least. Then they'll have a market cap of almost €1 billion. Compare that to today's market cap, add the dividend, and you'll get a 73% upside, which is about 11% CAGR. But of course, if the company would still be trading at a one-time sales ratio, which there are now, then excluding dividends, you would get a 19% return on your money, which is not great. But I'm happy to accept that. I have a, well, not big, but not very small position either. So I think the numbers look pretty good. But if you wanted to double your money with these assumptions, then under 27 euros would be the chance. And yeah, you might see the Christmas tree behind me and the Christmas sweater. I'm home with my family. Malte,
Yes.
do you like beer?
Hell yeah, I like beer.
Malte likes beer. You wanna come here and tell us which beer you would be drinking if you drank beer?
Hello, guys.
Ooh, fresh. Lovely. What is this sandal? Who makes these?
I can show you again. Yeah.
Have a peaceful Christmas and don't drink and drive.